Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 14th of July, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome to all the Trade Day team. So we're going to go through our slightly different webinar for the Monday, where we take a look at the slightly bigger picture, the shape of the week, take a look back at the major fundamental geopolitical technical factors, central bank factors that are influencing financial markets, have been influencing and are going to influence markets into this coming week. So we're going to start off. We've got our two reports. So if you're new-ish to Trade Day, take a look at the reports we have below. This where the webinar streams live in the members area. So the left hand column is the technical analysis reports. They're put up daily. We'll come to look at those shortly. So you've got those on bonds, stock indices and commodities, gold and oil, S&P and NASDAQ, and the 30s, 10s, 5s and 2-year bond market are all on the futures. And the middle column, you've got the macro summary, which you see in front of you, and the macro matters, which is the longer version of that. So the macro matters usually runs to 3 or 4 pages, recapping and looking ahead to last week and going into this week. The macro summary, just a summary of that, usually over 1 page, but because we have the earnings table in now, it's jumping across into 2 pages. So we're going to use those to go through in here. So let's go actually to the macro matters in here. So US stock averages last week did hit new all-time highs on Thursday. It has been, for the whole of July, pretty much market chopping sideways in a relatively narrow range, keep nudging just to new all-time highs on the US stock averages, NASDAQ, Dow, and S&P. Markets stayed relatively firm. They did actually, on the sell-off that we saw, a small sell-off on Friday, pulling back from new all-time highs on Thursday, but the markets actually ended up slightly down on the week. The Nasdaq was only a tenth down, the S&P a third of 0.3%, and the Dow about 1%, and the Russell 2000 1.3%. So markets sort of just retreating from new all-time highs on made on Thursday and retreating on Friday, but nevertheless staying really resilient and staying positive. We'll come to that when we look at the technical analysis reports shortly, and lower again over the weekend because of these tariffs. So tariffs remain in the spotlight. Trump last week and again over the weekend upping the ante on individual countries that haven't yet signed new trade deals. A particular note: Japan, South Korea, Mexico, Europe, and Canada. And then also last week we got the tariffs on copper, 50% on copper as well. So all of that keeping markets kind of slightly cautious, but as I say, new all-time highs on Thursday and only just down from those all-time highs. And so markets are kind of getting used to this rhetoric, this deal making that Trump, we know, does all of that, and we know that those tariffs are unlikely to be put into force. It's just hurrying along those partners that have yet to come to the table, or not come to the table, but sign those deals. So yes, we had that. So we're going to keep monitoring that going into this week. We did have a deadline last Wednesday, which has now expired, and sort of the can was kicked to the 1st of August. So we still have another couple of weeks, 2 and a bit weeks, for those deals to get signed. What else do we have? We also have in here, we had the Fed minutes last week on Wednesday, kind of mixed in here. We had some members looking for a cut as early as July, most in a wait and see mode, some saying no rate cuts before the end of the year. The likelihood here is the dot plot chart, the last dot plot chart we had from the Fed tells us that probably 2 rate cuts. The market is pricing in 2 rate cuts by the end of the year, and unlikely to get that at the July meeting, more likely in the September, October, December meetings, 2 rate cuts, maybe 3, but 2 rate cuts. And we'll come to the CME Fed Watch tool and we'll look at that in a little bit more detail shortly. Looking into the week ahead in here, so the key focus is going to be on the June CPI, consumer price index, inflation data. Inflation means it stays important for the Fed. We need to see that start to come down and maybe a little bit more. We need to see it not impacted potentially on uncertainty because of potential tariffs, and then maybe that will allow the Fed to start to cut rates. So CPI is the main focus going into this week, alongside earnings reports on the micro side. The Q2 earnings season kicks in really on Tuesday with the big banks, and we'll take a look at the calendar shortly. But yeah, we kick off, and so the next 2-3 weeks we're going to be focusing on earnings, particularly the larger the larger cap indices, or those sectors that particularly impact on the indices, because we can have those knock onto the indices as well. The other thing to mention, we do get some Fed speakers this week dotted throughout the week. This is the last week, so if I just, we'll come to it shortly, but the last week before the Fed go into blackout mode before the July meeting. Excuse me. So this will be the last week, so we're watching out for Fed speakers. So if we go down, we see we've got nothing really of note on the central bank side. Data-wise, Tuesday CPI, Chinese GDP, actually we've had already. Then we've got US PPI on Wednesday and retail sales also Wednesday. Retail sales on Thursday, and then Michigan consumer sentiment on Friday, and then Q2 earnings season kicking. So we scroll down, with this story in the rearview mirror going into tomorrow. The big focus is going to be on the US CPI on Tuesday. We get some US PPI, industrial production Wednesday, retail sales from the US on Thursday, and then Michigan consumer sentiment on Friday. Switching to the earnings reports, so the banks kick off. JP Morgan, Wells Fargo, and then Citigroup, and then also BlackRock. So banks and financials reporting from Tuesday. Bank of America then on Wednesday. ASML is an important one that we're going to be watching on the tech side, on the chip side, on Tuesday as well. And then also on the banking financial side, Goldman Sachs, Morgan Stanley, also large conglomerate, J&J, Johnson & Johnson. Netflix, important for a gauge of the US and global consumer. So we'll be watching Netflix in here, and Taiwan Semiconductor on Thursday. So some big names coming up, kicking off from Tuesday. We'll monitor those as we go forward. And looking into today, nothing really of significant note. We get this GDP data. Actually, it's tonight, the GDP data out of the China and trade data, but not going to really be impacting what we're looking at. And on the earnings side, we've already mentioned these already. There's nothing really of note today, but JP Morgan, Wells Fargo, BlackRock, we've mentioned all these. So we've got some big names coming up this week, Tuesday through Thursday, really the main focus. And then continuing over the next few weeks. As I mentioned in here, we go into blackout. So the Fed meeting is at the end of this month on the 29th and 30th, and we go into blackout a week and a half before that. So it's from this Saturday coming, the 19th. So we only have this week's worth of Fed speakers before the Fed go into their blackout period. Let's go through some of the headlines. We'll start off with Bloomberg Morning Briefings America in here. Markets in here lower slightly this morning because of this dialing up of the trade tensions with these announcing 30% tariffs on EU and Mexico effective August 1. So upping the ante a little bit, but we're going to have to wait and see whether they actually come into fore or not, or whether the deals get signed. That's the main headline from in here. So you see markets, US equity futures retreated because of that pretty much in here. Bitcoin going through 120,000 on the top side. New attacks from the president and the White House on Jerome Powell. Nothing in here though, apart from really those warnings on tariffs, which we had from last week, and I kind of reiterated over the weekend, but markets kind of taking those in their stride mostly. Stock futures fall slightly on tariffs. Bitcoin rallies, we've already covered that. Wall Street futures wobble on fresh tariff threats ahead of data and earnings deluge. We've already covered all that data and earnings we've got coming out. World stocks slip as US tariff threats, all the same stuff in here. Europe scrambles through a 30% US tariffs as stocks slide across sectors. And if we go around the global indices in here, you see nearly 0.3 down on the Nikkei, but the 0.25% up on the Hang Seng. European exchanges, hit, particularly the DAX in here, by those tariff threats, nearly 1% down, and the French CAC 0.4 down. UK FTSE doing better. Remember, the UK signed the deal, tying a trade deal with the US in here. So the FTSE actually up and weathering the storm. And US stock indices, though, actually lower. US stock futures, I should say. Let me just get this to drop down. So we're down about between 3 and 4 tenths across the board in here, across the S&P and NASDAQ, 3 to 4 tenths lower this morning. Turning our attention to the interest rate markets, this is for the July meeting, so 93% chance that we're unchanged still at the July meeting. If we go to the September meeting, this is the CME's Fed Watch tool. You'll see now 39% that we're still unchanged in here by the September meeting. So still not kind of nailed on that we get the first rate cut. So 61% chance we get a rate cut in September. If we go to October, though, pretty much certain we're going to get one rate cut at least by October. We've only a 16% chance of no rate cuts in here. And there is actually a chance here. You see, look, 36, 37% over here, 37% that we have two rate cuts or 50 basis points lower come October. And by December, the market's really looking for year end. You know, you see the peak in here is at 50 basis points down, currently at 425, 450. This is for 375, 400. So the market really pricing in two rate cuts, but there is an outside chance of three rate cuts and maybe only one rate cut in here as well. So, but the market pretty much pricing in, as the Fed have basically told us that they're looking to cut potentially from the dot plot chart twice this year. Bond yields continue to steadily climb higher within this kind of broad range they've been in. So they've been kind of captured in this range. Is a 10-year bond yield in here, but you can see moving towards the upper edge of that range in here at the moment. Not particularly negative, but just showing some concerns about maybe not as an aggressive Fed, maybe some concerns around the economy. So bond yields just climbing slightly higher in here, but within a defined range. We are bearish though with that move. You've been bearish for a while in here since the market started to move to higher yield. So we're bearish on price across and this is the technical analysis reports from Market Chartist. So you look here across we've reversed various support levels, trend lines. So on the 30-year, the 10-year, the 5-year, and the 2-year, the market looking bearish on price, which is higher yields. But stock indices, we're going to look at our reports here. You can see the market's been very, 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 very sideways in here. We did make new all-time highs earlier in July, dipped from those, made new all-time highs again on Thursday last week, dipped back from those on Friday. But in this kind of high-level sideways consolidation, still looking bullish in here for both the S&P and the NASDAQ, still pointing to the top side. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you with another Bull versus Bear webinar tomorrow on Tuesday. Bye.